individual stocks versus ETFs. So which one is actually better? So first, let me say that you can actually just go online and open a brokerage account for free and actually buy either of them. And you can just use like $5. You can spend $5 and say you're a fan of Apple. You could buy $5 worth of Apple stock. You could do that. You could buy fractional shares. Just go to like a brokerage like Robinhood, make an account, and put it in order when the market opens, and you can buy $5 worth of Apple or any other company that you believe in. As Peter Lynch used to say, buy what you know. Right? That's pretty good advice. So you can do that. You can buy stocks. At the same time, you can take your $5 and you can invest in some fund that tracks the entire market, right? You can put $5 into, say, SPY that tracks the S&P 500. And then you own a basket of stocks, right? 500 stocks for $5, right? I mean, that's just, it's amazing what has happened to the investing world. So you have so many choices. So what is the best choice? Well, the thing is, individual stocks, in my view, and I think this is just proven by history, have the potential to rise in incredible ways. And they also have the potential to drop in incredible ways, right? So if you buy $5 worth of, let's just use Apple stock again as an example, it could double, it could triple, it could quadruple, and it could also go to zero. I mean, what are the chances, right? Apple's probably not going to go to zero, but it could happen, right? It's a company, right? Any company you buy has the potential to go bankrupt. I mean, it happens. I remember when it happened to CIT Group, right? I remember that in 2009, or maybe it was 2010. I remember companies going bankrupt, right? It does happen. It's rare. Remember Blockbuster? I don't know if you've heard of Blockbuster. That used to be a company. People used to rent movies from Blockbuster. It's gone. It no longer exists. Like, what happened to Blockbuster, Yeah, so companies come and go, right? But ETFs, it's hard for me to imagine a scenario where you could spend $5 on something like, SPY, which is a fund that tracks, the S&P 500, and then that fund would go to zero. I mean, the entire world would have to fall apart. I mean, all 500 stocks would have to go to zero. It's unrealistic, right? The US has survived wars. We've survived, the Great Depression. We survived the financial crisis. It's a great country. I don't think, if that happens, I think we're going to have bigger problems. So what are the pros? What are the cons? Well, by buying stocks, I think you have more of a potential for a meteoric rise or a meteoric fall. And by buying funds, those profits are tempered. If you look at, let's say, Amazon stock, that has just done amazing. And if you look at, say, the NASDAQ, that's also done amazing. But if you compare the two, Amazon stock has beat the NASDAQ. So by buying individual stocks, there's definitely more risk and there's more reward. And by buying funds, there is less risk and less reward. So it's a personal choice. One thing that's really tough is that buying funds is really boring. If you go out and you buy the Dow, you could buy that by buying an ETF called DIA. DIA tracks the Dow. It's pretty nice, pays a monthly dividend. You can buy that. You can buy fractional shares, really, really easy. And it tracks the Dow. So when the Dow goes to 33,000, like, oh, I'm up. The Dow goes back to 20, you're like, no. But the Dow is not going to go to zero. Very, very unlikely, right? It's probably not going to happen. So more risk, more reward of the stocks. Less risk, less reward of the funds. It's a personal choice. And again, stocks are more interesting, right? People want to know what's happening with stocks. Funds, a little bit more boring. It's a tough decision, but maybe it's better to do both, right? Maybe it's better to have some stocks and some funds, just a little bit in both, and that keeps things interesting. What do you think? What do you like to invest in? What is your opinion on this really, really big debate? Because there's a lot of people out there, a lot of people. I remember people from, years ago. I've followed message boards on finance for years. I've been trading for years. And people have really strong opinions on this stuff. I mean, some people will only buy Vanguard funds. Some people will only buy like dividend growth stocks. I mean, there's all kinds of opinions out there on what is the best way to invest. And I think at the end of the day, the best way to invest is the way that you want to invest, right? The way that makes you happy. If you want to buy stocks and, track those stocks and read those balance sheets and try to like pick the companies that are going to be the winners in 5, 10 years, that's great. And if you want to just buy it and forget it, then maybe funds are the best choice. Just a short video rant. Yeah, good luck.